welcome back. You're watching Lunch Money. We're still in the green as far as the markets are concerned. 75.68 on the Nifty. That's with Adani, Yes, and Cipla leading the pack out there. But we've also had some of the numbers come in from the auto pack, and it's a mixed bag really. We've had Ashok Leyland and Eicher and Maruti come out with numbers. So what do you make of these numbers? Well, we've got our guest Bharat Gianani, auto analyst at Angel Broking, joining us. Bharat, thanks for joining us. We've got the first clutch of numbers, and I'm going to start off with the ones that the markets reacted most to, and that is Maruti. The total sales are down about 2.6%, and large part of this is because of an export pressure on the company, where exports are down about 35%. What did you make of these numbers for January?
Good afternoon. Maruti's numbers have been disappointing and have come in lower than our estimates. Particularly, if you see, as you rightly pointed out, the pressure has been more on the domestic side, where the sales have declined by about 34 to 35%. So possibly they have been facing pressures in markets such as Sri Lanka, where there has been a recent increase in the import duty. So possibly the reason for the export going down for the company. Also, if we see the domestic numbers have been sort of flattish, but there could be two possible reasons for it. One, as the company has pointed out in the press release, that they had a fewer working days in the month of January, so which impacted the volumes. And also in the con call last time, the company had pointed out that they had a very low inventory of wholesale, so possibly that could have impacted the January dispatches for the company.
You know, passenger car fall, the sales are down about 1.4%. Does it raise questions on this whole recovery in passenger cars, or do you think it's a one-off thing?
I think it could be a one-off thing, because as the company has mentioned in the press release that they had a fewer number of working days, and their domestic sales could have been higher had the working days would have been more. And second, in the month of December, the festive season had just concluded, so possibly the company was running low on the inventory, so which could have possibly also impacted the wholesale dispatches.
From Ashok Leyland's numbers, it's clear that the entire medium and heavy commercial vehicle bump up continues. We've got a 40% up on the MHCV sales. What's the outlook going forward? Because there's been a big outperformer this stock.
Yeah, definitely Ashok Leyland has in fact even bettered our estimates, and it continues to report very strong volume growth on the MHCV side. So two things are clear. One, the MHCV cycle clearly has emerged from the lows which it saw in FY13-14 period. FY15 has been a year of recovery, and the recovery is getting better. And also another thing is that Ashok Leyland has been gaining market share over the last 1 year because of increased penetration into the non-South markets, where it was relatively weak, and it has considerably increased its presence there. So MHCV industry recovery coupled with market share gains is definitely helping Ashok Leyland.
Aisha, what is your take on that? Total sales up 65%, though exports are down 26%. What did you make of these numbers?
Yeah, Aisha, if you see, the two-wheeler numbers have been very good, and last time around in the month of December they had some production issues because of the rains in Chennai, which impacted the production at their plant. But now I think they have they have resolved the production issues, and the company is again back on the track of increasing capacity given the good demand. So yes, definitely Aisha Motors numbers also are looking very robust.
Why are exports down? Do you think this is going to be a continuing trend, Bharat, that exports are going to be under pressure right now?
Exports for Eicher Motors still form a very
look at Maruti, look at Maruti. Look, I'm talking about industry.
Industry as a whole. Yeah, some of the issues, yes, definitely the companies in the auto sector are facing up because if you see the most of the exports of our automakers are in the region of Africa, and Africa has been, struggling with some of its countries facing devaluation on back of, slide in the crude prices, so which has impacted the demand. And also, if we see some of the countries like Sri Lanka have, increased the import duty, so possibly issues in Africa and Sri Lanka are definitely impacting the volumes of the automakers, and we expect the pressure to continue for the next 3 to 6 months, unless once the crude sort of stabilizes and inches up, then only possibly a recovery could be expected. So the export pressures are likely to remain in the near term.
But we've had Bajaj launch a vehicle in the 50 to 60,000 category, I think. What's your take on that, and what is your prospect for the two-wheeler companies? I don't think we've got the numbers as yet from them.
Two-wheeler makers, we expect the demand to remain lackluster, at least for the next quarter or so, unless the rural sentiment continues to remain weak, and unless there is a normal monsoon going forward, and recovery will only then be expected in the two-wheeler. So I expect two-wheeler players to remain in the pressure in the near term, at least.
What's your top pick in the auto pack right now?
As far as the auto OEM space is concerned, Ashok Leyland remains our top pick, given that it is a clear beneficiary of the uptick in the MHCV demand, and it has been continued to gain market share. Also, we like Eicher Motors because of the good demand in the near term, at least for Royal Enfield, continued good demand for Royal Enfield.
We leave it over there, Bharat. Thanks so much for joining us. Meanwhile, as you can see, European markets have opened. Let's quickly go and get you action from the European markets.